Good afternoon, everyone, and thanks for joining us for a discussion with the Real Brokerage. Excited to have CFO Ravi Jani joining us. He's going to go through a number of slides, and then we're going to do some Q&A. If you have a question for Ravi, put it in there's a chat button below, or feel free to email me at jason.helfstein@opco.com. So with that, Ravi, floor is yours.
Thanks, Jason, and thanks to the Oppenheimer team for having us. As Jason mentioned, my name's Ravi Jani. I'm the CFO of Real. Real is a real estate technology company that was founded in 2014. We have a very compelling growth story in the industry, particularly given the current state of the industry. So our primary business is real estate brokerage, where we provide agents a platform to build their business. We offer some of the most compelling economics in the industry, a collaborative culture, and most importantly, an AI-driven tech stack that's centered on our own proprietary software, which is called Rezen, which I'll talk about in greater detail. Sorry there's a little bit of feedback on my side. So to give a little bit of background on our...
Clear to us.
Okay, sorry. To give a little bit of background on our industry, there are approximately 1.5 million agents in the US, around 160,000 in Canada, and in an average year, the industry generates... It's all good? Okay, still hearing some feedback on this side. Apologies. To give a little bit of background on our industry, there are approximately 1.5 million agents in the US, 160,000 in Canada. In an average year, the industry generates roughly $100 billion in annual revenue. That represents the total amount of commissions paid to agents. Every agent must be affiliated with a brokerage such as Keller Williams, Coldwell Banker, or a brokerage like Real. An agent can't work completely independently. They have to be affiliated with a larger brokerage or any brokerage for oversight. So if you look at the market, it's been dominated by traditional players for many decades, all of whom operate in the same way. They rely on physical office space for distribution of service. They charge agents a lot of money for what we believe is poor value. And even though we've been growing very rapidly for the last several years, we're still less than 2% of the overall market, which gives us confidence that we have a very long runway for growth ahead, regardless of how the end market recovers. To give you a little bit of perspective on why the company exists, when we started the company, we knew that there was a better opportunity to offer agents value relative to what incumbent models offered. And so if you go down the list of what differs Real from a traditional brokerage, it starts with the economics. It expands to technology, where we have our own proprietary software. We have 24/7 connectivity through our app, a culture that spans across zip codes, across state lines, across the country, continuous training every day. There are new trainings available in Real Academy, led by some of our top agents in the country. So if you're an agent with Real, it doesn't matter if you're confined to a certain region, you have the best of the industry at your fingertips. And as it relates to the growth potential, as I mentioned, it's a very fragmented market. And so we believe we're still in the first inning of what's going to be a very long growth trajectory. Lastly, I'll touch on ancillary services in greater detail, but we also offer title, mortgage, and fintech services to our agents. And these are higher margin services that are quite nascent today, less than 5% of our gross profit, but will be long-term gross margin and profit drivers for the company. To give you a little bit of perspective on our growth trajectory, so when the company went public in 2020, it was actually a very unusual decision, because at the time, Real was generating around $15 million in annual revenue. But we believed that our agents were really our partners in building the business. And so we wanted to create an equity incentive plan where they could participate in the upside of the business that we were all building together. And obviously, having public equity is much more attractive than having equity in a private company. And so we initially took the company public by listing on the TSX Venture Exchange in Canada. A year later, we direct listed in NASDAQ. And today, we're currently only listed on the NASDAQ. We're headquartered in the US. But going back to 2020, 2021, we really started growing like crazy. And that was a very different housing market than the one that we're in today. And yet, despite the fact that the housing industry has now collapsed to what are trough-like levels, we've continued to deliver incredible growth. If you compare our LTM revenue of 1.6 billion to the LTM revenue in Q2 2022, just before the market started to turn, we've 6x'd. And that's again against a market that's declined by 25% over that time. And so we've proven that we can grow very rapidly despite a very challenged end market. And that just gives us a lot of confidence that we'll continue to grow in 2025 and beyond, even if mortgage rates stay higher for longer. Although I think, recent indications are that we could see rate cuts, which would obviously be a nice tailwind. So the big question is really, why are agents joining us? Why are we seeing so much growth when others are struggling or losing agents? And so from our perspective, there's really four key reasons why agents join Real. The first one is really the freedom and flexibility that we offer as being part of the Real platform. If you think about agents, they're independent contractors, they're entrepreneurs, they're essentially small business owners, and yet the regulations require them to be affiliated with a brokerage. So when an agent works for a traditional brokerage like a Remax or a Century 21, they end up building someone else's brand, right? They have a broker or a manager that tells them exactly what to do, when to come to the office, what their marketing material should look like. Someone else is effectively controlling their business, even though at the end of the day, they're an independent contractor. And so at Real, agents have the freedom and flexibility to build their businesses their way, which is a huge draw for entrepreneurial agents. Last year, we introduced two programs called the Private Label and Pro Teams programs, which allow independent brokerages and teams to keep all of their external branding the same. They get to keep all of their individual compensation models on an agent team lead basis the same, and yet they can still join Real. They can access all of our technology, all of our resources, benefit from lowering their own overhead costs, all while keeping their same external brand. And so Private Label has been a huge success. Somewhere around 15% of the agents who've joined over the last 18 months have joined under Private Label. And I think it's really one of the most compelling opportunities for independent brokerages out there who are looking to align with, a larger player. Now, the second reason why agents join us is obviously the economics, which I mentioned at the start of the call. We have a very unique compensation model that offers agents high commission splits, revenue sharing opportunities, and the potential to earn equity in the company by achieving certain milestones. And so the average agent who joins Real typically ends up paying half of what they would at a traditional brokerage. And that means that for the vast majority of agents in the industry, they're likely leaving significant income on the table by affiliating with any brokerage other than Real. So to put some numbers on it, most brokerages will likely charge something around 30% splits on every commission dollar an agent generates. At Real, our split starts at 85-15, meaning the agent gets to keep 85% of every commission dollar they generate, and that's up to a $12,000 annual cap, which means once an agent has paid $12,000 in splits to Real, they get to keep 100% of every commission they generate and only pay us a flat transaction fee of $325 per transaction. And so that's really appealing for high-performing agents and teams, and that's obviously why we're seeing a lot of traction within those segments. Now, the next reason why agents join us is technology, which is truly our forte. We consider Real a technology company. Although we operate a brokerage and a mortgage and title company, it's really our tech platform that sets us apart. At the core of our tech stack is a proprietary transaction management platform, which is called Reason. And Reason's built around four main pillars, really meant to empower agents and streamline their workflows. The first one being productivity. And so this includes everything agents need, from a CRM to a transaction management platform, tools to draft and sign contracts, as well as a dashboard that gives them real-time visibility into their business 24/7. So everything is mobile first. It's designed for our agent-facing app, and so that agents can manage and manage their workflows from the palm of their hand, and they can spend more time out in the field with clients. Second, under technology, is marketing. So we've consciously decided not to market Real as a consumer-facing brand. So unlike a traditional brokerage like a Remax or Coldwell Banker, we don't think consumers choose agents based on their brand affiliation. Like, nobody goes into a Coldwell Banker office and says, hey, I'm looking for a home, and so I'm here because I know Coldwell Banker is great agents. Instead, people choose agents based on referrals, based on knowing that that person is an expert in the area, or by seeing their yard signs on social. And so we're taking our marketing dollars and we're investing them in making our agents better known in their communities. So agents have the opportunity to order offline brochures, yard signs, magnets, everything directly through our platform. Every agent has a personal branded app, personal branded website that comes free as part of the package with Real. And all of this is managed through reZen, as I mentioned. Now, the third bucket of technology is community. So we don't have physical offices for agents to use. Obviously, it's a huge cost savings for us, but we recognize the importance of agents being able to get together. And so our app has a community feature for agents to do exactly that. Think of it like a Facebook feed. Agents can ask questions, they can share success stories, they can organize meetups. And the beauty of this is that agents are not confined to a physical office anymore. They can interact and tap into the knowledge of thousands of agents across the country rather than just, the handful of folks who may be in their office. And so finally, under technology, the true backbone of Real is our efficiencies on the brokerage operations side. If you think about all the tasks that still get done by humans in the back office of a brokerage, things like reviewing files, signing documents, processing payments, we took all those tasks that consume human labor and we put software to work to automate as much of it as possible. And so right now it takes us 2 to 3 minutes of human labor to process a transaction and review a file versus a traditional brokerage, which would likely take 2 to 3 hours for a human sitting in an office space to get that work done. So it's a huge competitive advantage for us that we believe sets us apart and allows us to operate with a much lower cost structure than a traditional brokerage. Now, I think it's important to just double click on technology for a moment, particularly given the investments we're making in AI. And so we do believe that we've built the leading tech platform for brokerage operations. And we've recently announced some AI innovations that represent the next step in our journey. So specifically last year, we announced that we're centering reZen around Leo Copilot, which is our AI-powered command center. So anytime an agent logs into reZen, at the top is a banner for Leo Copilot. It's a virtual assistant that has visibility into all of an agent's transactions, all of their revenue share, basically their entire business. It's your virtual assistant that knows everything about deals you have coming, transactions that need documentation review, anything that's missing. It's somebody proactively letting you know, hey, this is what's in the pipeline, and make sure that you're ready and that you're not missing a beat. And so this AI-driven approach, it allows agents to spend a lot less time doing administrative work and focusing on what matters most, which is serving their clients and closing deals. And it really is a game changer. As an anecdote, in the second quarter, we had Leo Copilot act as the first layer in answering customer support calls or agent support calls out of the reZen platform. And in the second quarter alone, Leo was able to answer 28% of calls into the support team, which means nearly 2,000 calls did not go to a human operator. It gave agents a much faster response immediately, and it allowed our human support team to focus on more complex issues, elevating the bar for service. So we're very excited about Leo and AI. We're putting it to work every day. And because we have all of our agents on one common platform, we think it enables efficiencies that traditional brokerages just are, years away from being able to untap. Now, lastly, the fourth reason why agents join Real is our culture, which may not resonate a lot with the Wall Street crowd, but agents want to work in an environment where they can grow, where they can learn from others. And I'm very proud to say at Real, we built a culture of collaboration over competition. At a traditional brokerage, you may be competing with the person in the desk across the hall from you. At Real, given that the revenue share mentality, the collaboration mentality, we foster an environment where agents support each other. They want to share knowledge. They want to share everybody's collective success. We think approximately 50% of our agents are shareholders in the company, and they want to participate in the shared success of the company. And I think that really rings true for all of our agents. Anybody who's interacted with our agents or attended one of our events, the culture is something truly differentiated. I want to just spend a moment on the efficiency of our platform, which we talked about. The first chart at the top of the screen shows our fixed cash operating expenses as a percentage of revenue, which has continued to decline year over year. It just demonstrates our ability to grow revenues much faster than fixed costs. Another metric that we like to highlight is our headcount efficiency ratio, which is the ratio of agents to full-time brokerage employees. So typically at a brokerage, you would have one employee for every 20 agents. At the end of the second quarter, our ratio was one full-time employee for every 87 agents. And if you compare that to other brokerages, I mean, it's, multiples of what any of the other public players out there have demonstrated. And I think it's a huge competitive advantage. It just allows us to support our rapid growth while prudently scaling OpEx efficiently. We spent a lot of time talking about brokerage, but I think it's important to also talk about ancillary services. So in recent years, we've made 2 acquisitions of a title company and a mortgage company, and expanding into these business lines was very deliberate because our brokerage gross margins today are between 8 and 10%, whereas title margins are north of 80% gross margins, and mortgage is in the 40 to 50% range. And so significantly higher revenue or significantly higher gross margin per transaction when you attach title and mortgage. And so we're in the process of scaling both of these businesses. But when we look to the future, our success and our growth isn't just going to be about attracting more agents and more transactions. Obviously, we will continue to do that, but it's also about maximizing the value of each transaction. And that comes from attaching more of these services. Today, we're around 4% attachment on the title side in the states we operate. We're around 1% in mortgage. And so it's a huge opportunity for us to drive improved profitability and expand our margins by attaching more of these high margin services. When we think about the future of the company, our vision is really to transform the home buying experience for agents and their clients, and that's going to come from an AI-driven experience. So anyone who's bought a home today knows that the process is broken, it's not enjoyable, you don't have a lot of visibility into closing or even where you are in the process. And so we think that technology can dramatically improve that client experience. And so to that end, in October of last year, we announced that we're developing a new consumer-facing product named Leo for Clients. This is an AI-powered text-based interface that will allow our agents and their clients a seamless experience from discovery to close. And you may have seen that last month we announced we acquired the consumer-facing home search portal from Fly Homes, which is a prop tech startup that's invested significantly into enhancing the consumer experience. And so by leveraging the Fly Homes team and combining that with our AI engineers, we're really looking forward to launching the alpha version of Leo for Clients later this fall. And it really represents a huge opportunity to improve the client experience and also drive attachment of our higher margin mortgage and title services, as we'll now have a direct line of contact into our agents' clients. Now, another major initiative that I think is worth spending a little bit of time on is Real Wallet, which is our first fintech product tailored specifically for real estate agents. So previously, when an agent would close a transaction, we would collect the funds, we would transfer the agent split directly into their bank accounts, and we wouldn't monetize, 80 to 90% of that transaction. Last year, we launched the Real Wallet, which is a digital wallet that every agent at Real will have access to. Today, agents in the US have the opportunity to open a business checking account. They can receive a Real branded debit card. And in Canada today, select Canadian agents have access to a line of credit. So since we've rolled out the wallet in the fourth quarter last year, 2 full quarters later, we now have 3,600 active wallet users. The total deposit balance in Real Wallet checking accounts is $15 million. In Canada, we've extended $4 million in lines of credit. And so if you think about the revenue streams from the wallet, first, it's interchange fees. Every time an agent swipes the debit card, we'll earn a percentage of that transaction. Second, it's the interest income on the float balance held in the wallet. And third, it's the APR on credit lines, which today are only available in Canada, but we anticipate launching the US lines of credit this quarter. So just 3 quarters into the launch, we're run rating at over $1 million in annual revenue. And we look forward to watching this number grow as we're really in the first inning. We haven't rolled out rewards points, which are forthcoming. And we think the wallet adds a new layer of flexibility for agents. It will create greater retention for agents using the wallet. It really exemplifies our vision to go beyond a traditional brokerage and really build a comprehensive ecosystem for agents to manage their business, manage their wealth, grow their wealth all in one platform. Now, I think we can close the prepared remarks with, why I'm so excited about our future. And if there's a few key messages I want to leave you with, it's first, we're very confident in our ability to deliver significant above market growth, regardless of how the macro recovers. Two, our proprietary software and AI powered platform create a competitive advantage, streamlines workflows, reduces our operating costs, and really empowers our agents to deliver better outcomes for their clients. And then lastly, our expansion into high margin ancillary services such as mortgage, title, fintech positions us for substantial long-term profitability growth. I think we can wrap the formal remarks there and go to
Great.
Q&A.
Terrific. So, again, a reminder, if anyone wants to ask a question, feel free to put into the chat. So, Ravi, first question, look, basically every brokerage firm, Lewis, we can take down the slides. Basically, every major brokerage firm claims to have strong technical capabilities. I mean, historically, a lot of the benefits you got from being part of a big brokerage firm was discounts on third-party um, products. But I mean, maybe talk cumulatively, how much have you spent to, on your tech platform? And then I guess like, the ability to do a transaction end to end, right, probably should be the hallmark of a true digital workflow. So maybe elaborate on that a bit.
Yeah, I mean, total investment into the tech platform is in the tens of millions. In the second quarter, we spent about 4 million in R&D, so we're run rating in the mid-teens, and that's annually, and that's growing. If you factor in Fly Homes, that also spent a significant amount of money on their platform, that's now a part of ours. It obviously would push that number higher. You're right. A lot of real estate brokerages talk about being technology companies, but you're also right that today a lot of them still just offer a disparate collection of third-party services. I think what differentiates Real is that 100% of our agents use our technology. It's not optional. And that level of adoption is what allows us to operate incredibly efficiently and to pass those savings on to our agents through the higher splits. I think with respect to that end-to-end platform, it starts with having all of your agents on one common platform. And then because it's our own proprietary system, the ability to layer on ancillary services all in one ecosystem makes it easier. We're not stitching together a bunch of third-party tools or giving agents a bunch of discounts to a bunch of third parties and they can choose their own adventure. We get to control the experience soup to nuts, and that's been our differentiated value prop, both on the front end and the back end.
Right. So basically, where like other firms kind of have technology that's like maybe a nice to have, the point is that if you join Real, you have to use the technology. So really, you just have this like it's basically it's a forced buy-in.
Yeah, exactly. There's no other way
Oh,
for
Robbie, you could stop sharing, basically. I think that's the key here.
got it. I will stop sharing.
There we go.
Nope, that's correct. It's mandatory. I mean, at a traditional brokerage, and a lot of them have invested a lot of money in tech. But if you're an agent and you're working out of an office and you don't want to use the tech, that's fine. There's a human there who will process the file for you. At Real, we save that work for software, which can do it much more efficiently. And so, yeah, it's not optional.
So, yeah, another question. I just want to jump over to some of the new products. So, a lot of companies in the industry have wanted to launch mortgage and title just because the fees are so attractive, and it's been difficult, whether it's RESPA rules or like just actually, like getting the workflow right. Can you disclose what are the attach rates right now, and just why do you think you figured this out where so many others have struggled to figure out how to get these products to scale?
Yeah, so I may have mentioned the attach rates today are quite low. And on the mortgage side, we're around 1% of the states we operate. On the title side, we're closer to 4%. Um, you know, there's sort of a near-term and longer-term strategy with respect to driving attachment. I think in the near term, we're going to continue to do a lot of the traditional things that we have been doing that have driven, the 80% growth in mortgage in the second quarter. So that's getting in front of agents, coming up with innovative programs like Real Originate that allows agents to become licensed loan officers. We've launched an inside sales team on the mortgage side, bringing over some professionals from Rocket. On the title side, we have a state-based JV strategy, which means that we are opening up joint ventures in the states where title is licensed, where some of our largest, most productive teams are joining as equity partners in the joint venture and sending deal flow. And then as more agents in that state send volume to the joint venture, they can qualify to become investors in the JV as well, or partners in the JV rather. So I think we're in the early innings of proving out the attachment thesis. I think that's sort of the near term is continue building on the progress that we have. The longer term is really building that better client experience and making title and mortgage part of the client experience and the flow, which is why we're investing so many resources into building a consumer-facing portal. That's not a consumer app, but it's really a text-based interface that every agent will have their own unique phone number that they can use that's enhanced by AI. And that way, when a client is looking for a home, they can search for a home, they can schedule viewings, and then when it's time to make an offer, they can get easily pre-approved all via one closed loop system that's all offered by Real.
Got it. So, I mean, so much of your growth has come from agent addition. I mean, how do you think about it between individual agents versus teams? Like, is there like a metric you can share, like the average team size who's joined, let's say, over, the last few years?
Yeah, it's around 50% solo agents, 50% teams has been the mix. I think that it's been a little bit heavier on teams in the last 2 to 3 years than when we first went public in 2020, 2021. I think part of that is just a function of getting some really strong teams join the platform. The business has, really been validated by some wonderful teams who've come on board. And then with the advent of private label last year, now around 15% of agents who join Real are coming under the private label program, which is allowing independent brokerages to align with us. So the mix of agents is around 50-50 agent solo versus teams, but the team mix has certainly improved, and the quality of teams joining is really top notch relative to several years ago, where it was much harder to convince a large team to come join Real when we were sort of an unknown entity. Now we're a known player. We're top 5-6 brokerage in the industry. We're a force, and a lot of teams who are joining and aligning with us know that they see the future of the industry and where it's going, and they want to be aligned with the winners.
And like maybe talk about is there a different economic incentive for teams versus because the way the rev share works, like and that part of what's attractive about that?
The revenue share model is consistent across solo agents and teams. Teams, depending on the team size, they can qualify for certain team-based caps. So if you're an agent on a team, that $12,000 cap may be a $6,000 cap or a $4,000 cap, depending on the size of the team. Again, that's one of the benefits for teams coming or agents aligning with the team as opposed to solo agents. But in general, the economics are largely the same. The rev share model works the same, whether or not it's a team or solo agent.
You've been bringing on more high producing agents, and again, based on more on efficiency than, let's say, just average home price. But what's been the driver of that?
Well, what's been the driver of bringing on more high producing agents?
Yeah.
I think there's a couple things happening in the market. One, you're seeing the less productive agents just leave the industry. It's a bit of a sign of the times with the industry operating at such low levels. More of the volume is just going to, full-time agents, more productive agents. Our ability to attract some of the most productive agents is really a function of just proving out the business model and the value prop. I think a lot of the most productive teams are still aligned with traditional players, and they've been with the Douglas Ellimans or the Century 21s for decades, and they've never thought to look outside of what they know. But I think the next generation of producers is embracing this model as the future. And so I know a number of top teams who have left some of those traditional models. They see the six-figure savings that they're getting from being a part of Real, and they would never go back. So I think it's this sort of slow evolution of the industry from the traditional model to models like ours. And I think we have, one of the most attractive value propositions, if not the most, in the industry. So I think we're accelerating that shift.
Can you talk a bit more about how the rev share model works with agents and agent recruitment?
Sure. So the revenue share model is tiered. So it's when agents join Real, if they attract other agents to join Real as well, they are then named if they're named as a sponsor for that agent they've attracted to the company, they can earn a royalty, effectively revenue share off of all of the revenue that generated by that agent they brought onto the platform. And so depending on how many agents you've brought to Real, you can unlock subsequent tiers. So in your first line of agents that you brought on, you can earn up to 5% of that agent's gross commission income, which comes out of Real split. Obviously, that scales up as you attract more agents to Real. The amount of revenue you can earn off of those agents also scales up, and you can unlock subsequent tiers of revenue share. Now, for Real, we have the way that the revenue share model works is that there's a cap on the amount of our split that we will pay out in revenue share, which is 60% of the company dollar split. And so, mathematically, if there's a 15% gross profit split, 60% of that would be 9 points. We would pay out a maximum of 9 points on that transaction into the revenue share pool.
Question on the wallet. So super interesting, kind of both adding functionality to the agents as well as, kind of financially, this is helpful to them. On the loans, how are the loans backstop? Like, what's the credit recourse? So you extend $1 million, I mean, whatever, a few $100,000 loan, and the agent doesn't pay it back. What's your recourse?
Right. Well, I think the agent that would qualify for a few $100,000 loan would be an agent that has a lot of production. So an agent that has a lot of pending transactions, an agent that likely has revenue share. And so we obviously have a first line of getting repaid just from the transactions in the pipeline. To the extent there was a need to collect or a default, there's the independent agreement kind of stipulates the revenue share pool as a backstop, but ultimately that's not the goal is really to just be very tight on our underwriting, make sure that we're only extending credit to those agents who are with the platform, who have production, who have assets on the platform, and we're being disciplined and extending credit to those that are really using it as a business line of credit and understand ROI, that if I invest X dollars into my business, it'll generate X return. But yeah, our ability to collect has not been a concern of ours.
And then the company has always been, I mean, look, it was founded as like a tech-enabled brokerage platform. Really in the last call it 18 months, right? There's been all of these new LLM agentic models and tools you can use. I mean, how much of that is already powering what you're doing versus there's just still, much more to come either on the front end or the back end from an efficiency standpoint?
I think with anything with AI, we're in the first inning. I think we're standing up our own in-house AI automation team as we speak this quarter. That's going to be tasked with looking at every single process in the business to figure out what we can automate using AI if we're not already doing it. I think we're early in embracing AI. Like Leo has been out for 2 years, so only a little bit longer than ChatGPT, or a little less than ChatGPT. And so I think we've been leading the charge in embracing AI in the industry. I think we'll continue to, but it's, day one
All
of
right. So there's
AI
definitely
will
some more
alone.
unlock to come. Last question, what are your thoughts on kind of the real estate market from here?
Well, look, I think as history would suggest, there's probably only one way you can go up, where you can go from here, which is up. We're at historic trough levels in terms of existing home sales activity. I won't venture to guess on timing of when the market recovers, but I think we've been bouncing along at this 4 million existing home sales level, which, if history is a guide, is basically as low as the end market gets. The rate environment, you've seen a little bit of a pullback in the long bond, and I think there's growing anticipation that rate cuts could be forthcoming. But ultimately, I think Americans need homes. I think the market's undersupplied. I think we're operating well below the historical, mid-cycle average. And so the direction of travel will be up, but I won't venture to guess on timing.
Got it. Okay, we're going to stop there. Ravi, thank you very much for your time. If anyone has any questions, feel free to reach out to me and we can connect you with a company. Thanks, everybody.